Hello traders! Today I will share with you the best time to use the MACD indicator to detect trade opportunities in the market. So what's the MACD indicator all about? MACD is an acronym for Moving Average Convergence Divergence. This technical indicator is a tool that's used to identify moving averages that are indicating a new trend, whether it's bullish or bearish. This indicator is also used to check the strength and the direction of a trend as well as to define reversal points. Here's the MACD indicator on our trading chart. Let's check out the parameter settings. As we can see, the fast length number, which is the 12, represents a moving average of the previous 12 bars. The slow length number, which is the 26, represents a moving average of the previous 26 bars. While the signal smoothing number, which is the 9, represents the difference between the two moving averages above. There is a common misconception among traders when it comes to the lines of the MACD. As we can see, the MACD has two lines, and which are the blue line, which is the MACD line, and the orange line, which is the signal line. Therefore, the two lines that are drawn are not moving averages of the price. The MACD line is the difference or distance between two moving averages. These two moving averages are usually exponential moving averages, EMAs, while the reddish and the greenish bars here are called the MACD histogram. As we can see, the MACD line is considered the faster moving average, while the signal line is considered the slower moving average. The slower moving average plots the average of the previous MACD line. Most charts use a 9-period exponential moving average, EMA, by default. This means that we are taking the average of the last 9 periods of the faster MACD line and plotting it as our slower moving average. The purpose of the signal line is to smooth out the sensitivity of the MACD line. The histogram simply plots the difference between the MACD line and signal line. It is a graphical representation of the distance between the two lines. It may sometimes give you an early sign that a crossover is about to happen. Now that you have a better understanding of the MACD parameters, it's time I show you how to use it to detect trade opportunities in the market. The best two ways to effectively implement the MACD for trade opportunities are through the lines crossover in the direction of the trend, through the MACD histogram divergence system. We now know there are two moving averages with different speeds, and in which the faster one will obviously be quicker to react to price movement than the slower one. When a new trend occurs, the faster line, MACD line, will react first, and eventually cross the slower line, which is the signal line. When this crossover occurs, and the fast line starts to diverge or move away from the slower line, it often indicates that a new trend has formed. Now let's carefully study the chart here, and relate the price chart ups and downs to the MACD indicator. We can see this chart is in a bullish trend. So to be on the safer side, we need to trade the upward crossover of the MACD lines. From the low swing here, we can see how the blue line crossed over the orange line. This crossover indicated the counter-trend rally here is over, and the bullish trend is about to resume. We can see how the indicator crossover gave the early buy entry setup in this market. To use the MACD crossover for a bearish setup, we need to look out for a bearish trend. As we can see, this trend is on a bearish rally. To trade along with the trend, we need to watch out for MACD line to cross downward below the orange line. From the crossover of the blue line below the orange line here, we can see how the trend transformed into a more bearish rally. The crossover of the orange line above the blue line here is a signal to close our selling position. You can see the crossover of the MACD trading strategy is simple and effective if used to trade along with the direction of a trend. Now let me show you how to use it to trade the divergence system. The MACD is the best suitable indicator to trade the divergence system. And that's why the indicator is called the moving average convergence and divergence. The MACD lines and the histogram can be used for detecting divergence of price. But the most active for detecting the divergence is the MACD histogram. Divergence simply means disagreement of direction of move between the price and the indicator. On this chart, we can see price made a low swing here, and here comes a lower low swing. Now let's see the reaction on the MACD indicator. We can see the histogram made a low swing on the first swing low of the price. But on the second move of price, what can you notice? We can see the MACD histogram made a high low. Also study the MACD lines. What can you notice? The MACD line as well made a high low to the previous low swing here. The action which occurs here is called a bullish divergence. This action notifies us of a weakness in the bearish momentum, and that the bulls are gradually setting to reverse the trend. We can see how the bearish trend was then rejected into a bullish rally. To implement the MACD for a sell signal through the formation of the divergence system, let's look out for a bullish rally. Here comes a bullish rally. And we can see how the bullish rally crashed at this high. Let's see what the MACD signaled during this event. We can see the MACD histogram signaled the crash of this market here. But the MACD lines failed to detect this selling trade setup. Relating price of the chart to the MACD, we can see the histogram made a high swing here. But here, the histogram made a low high swing. This formation is called the bearish divergence. The bearish divergence signaled the bulls are now in a state of exhaustion, and there's a high tendency for the bears to set in. Although, if you implement the MACD crossover to the downside, you would have taken this sell trade setup. But the trader who utilized the MACD histogram would have gotten into the trade earlier. We can see how the market crashed down. Let's take the measure of this market crash, from the high swing here to the low high swing here. That is 315 plus bearish rally. Now you can see the MACD is a powerful indicator for detecting reversal of a trend through the MACD divergence system. Also a reliable indicator for a trend continuation through the crossover of the MACD lines.